Imagine a payment has just happened in a corporate bank account. The account has either been debited or credited. But how does the bank notify the customer's system about that transaction? This is where camt.054 comes in. In this video, we'll understand camt.054, its XML structure, key elements, real banking examples, and how it compares with camt.052 and camt.053. Camt.054 is an ISO 20022 bank-to-customer account notification message. It provides information about debit and credit entries occurring on a customer's account. Unlike a payment initiation message, camt.054 is used to notify the customer about an account transaction. In simple terms, camt.054 means your account has been debited or credited. Why is this notification important? First, it provides faster visibility into account activity. Second, the structured information can support automated reconciliation. Third, it reduces the need for manual checking of account statements. It also supports straight-through processing and helps Treasury and cash management systems react quickly to account activity. So the basic idea is notification, processing, reconciliation. Camt.054 can be useful across several banking and corporate processes. Banks can use it to notify customers about account entries. Corporate treasury teams can consume these notifications for cash management. Payment processing systems can use the information for downstream processing. And ERP or reconciliation systems can use transaction references to automatically match payments with business transactions. For example, when a corporate account receives a customer payment, the bank can send a credit notification to the corporate system. Let's look at the complete flow. First, a payment is initiated. The bank processes the payment. Once the account is debited or credited, the relevant account entry is recorded. The bank can then generate a camt.054 notification. The corporate system receives this notification and can use the information for downstream processing and reconciliation. So camt.054 effectively connects bank account activity with business processes. Let's understand the name camt.054. Camt represents the cash management message family. 054 identifies the debit and credit notification message. The next part identifies the message definition and version. For example, camt.054.001.08 identifies a particular version of the camt.054 message definition. The important thing to remember is that camt.054 is the message family for debit and credit notifications. Now let's look at the high-level XML structure. At the top, we have the document. Inside it is the bank-to-customer debit and credit notification structure. The message contains a group header, followed by one or more notification blocks. The notification contains account information and transaction entries. And within an entry, we can have detailed transaction information. So conceptually, the structure moves from message, account, entry, transaction details. The GrpHdr, or group header, contains message-level information. For example, message ID identifies the message. CRDT TM tells us when the message was created. Depending on the implementation and message version, additional message-level information can also be present. The key point is that the group header describes the notification message itself, rather than a specific transaction. Next, we have the NTFCTN, or notification block. This is where the actual account notification information is organized. It can contain the notification identification, account information, transaction entries, amounts, credit or debit indicators, and transaction details. A simple way to think about NTFCTN is, what happened to this account? It provides the context needed to understand the account activity being reported. Before looking at the transaction itself, we need to know which account was affected. The account section can provide account identification, such as an IBAN or account number. It can also provide the account currency, account owner or related party information, and information about the servicing financial institution. For example, we might have a corporate current account in euro maintained by ABC Bank. So remember, the account section tells us where the transaction happened. Now we reach one of the most important parts, the Ntry or transaction entry. An entry can contain the transaction amount and currency, the credit or debit indicator, booking date, value date, and entry status. For example, this entry shows 25,000 euros with the indicator CRDT. That means the account was credited with 25,000 euros. The Ntry is therefore where we start understanding the actual financial impact on the account. One of the most important concepts to remember is the difference between CRDT and DBIT. CRDT means credit, money comes into the account. DBIT means debit, money goes out of the account. Here's an easy memory trick. CRDT equals credit equals cash in. DBIT equals debit equals cash out. Whenever you're reading a camt.054 message, this indicator helps you immediately understand the direction of the account movement. Once we know the account entry, we can look deeper into the transaction details. These details can provide information such as the bank transaction code, payment identification, counterparty information, related parties, original transaction references, and additional transaction information. This information helps answer two important questions: who sent or received the money, and why did the transaction happen? This is particularly important for reconciliation and automated processing. References are extremely important for automation. A transaction can contain an end-to-end identification, transaction identification, instruction identification, account servicer reference, and remittance information. For example, end-to-end ID, INV 2026-001245, and the remittance information could indicate invoice 1245. These references allow downstream systems to connect the payment with the business transaction. So we can have payment invoice customer accounting entry. That's one of the key reasons structured payment references are so valuable. Let's now look at a simplified XML example. The AMT element tells us the transaction amount and currency. Here we have 25,000 euros. Next, CRDT tells us whether the entry is a credit or debit. Here the value is CRDT, meaning credit. The BookDT section provides the booking date. In this example, August 14, 2026. Finally, inside the transaction details, we have the end-to-end ID, which is INV 1245. So when reading this XML, focus on four things. Amount indicator date reference. Let's bring everything together with a real-world example. Imagine a customer pays a corporate invoice for 25,000 euros. The customer initiates the payment. The payment is sent to the bank. The bank processes the payment and credits the corporate account. The bank then sends a camt.054 credit notification. The corporate ERP system receives the notification. Using the amount and transaction references, the ERP can automatically match the payment against the invoice. The result? Less manual work and faster reconciliation. Now let's compare three important cash management messages. Camt.052 is an account report. Think, what's happening? Camt.053 is an account statement. Think, what happened? And Camt.054 is a debit and credit notification. Think, something just happened. So remember, 052 report, 053 statement, 054 notification. Now let's compare Camt.054 with the legacy MT900 and MT910 messages. MT900 is traditionally associated with debit confirmation, while MT910 is associated with credit confirmation. These are legacy SWIFT FIN messages. Camt.054 belongs to the ISO 20022 family and uses XML-based structured data. ISO 20022 can carry richer and more structured information, which can support automation and reconciliation. However, the exact migration mapping between legacy messages and ISO 20022 depends on the bank, market practice, and implementation. So we should not assume that every MT field maps one-to-one to a Camt.054 field. Let's summarize the major benefits of Camt.054. First, faster notification. Systems can become aware of account activity more quickly. Second, automation. Structured transaction information can reduce manual processing. Third, better reconciliation. References can help match payments with invoices. Fourth, structured data. XML allows systems to process information programmatically. And fifth, better visibility for treasury and cash management teams. Together, these capabilities help organizations move toward more automated account and payment processing. Let's look at some common mistakes. First, don't treat Camt.054 as an account statement. Second, don't confuse CRDT and DBIT. Third, don't ignore transaction references. They can be critical for reconciliation. Fourth, don't assume every bank provides exactly the same data elements or implementation. And finally, don't treat Camt.054 as a payment initiation message. The key point is, camt.054 tells you about an account transaction. It does not initiate the payment. Here's your quick camt.054 cheat sheet. camt.054 means debit and credit notification. CRDT means money in. DBIT means money out. Ntry means notification. ACT means account. Ntry means entry. TXDTLS means transaction details. Refs means transaction references. And remittance information provides payment or invoice-related information. And here's the one-line memory trick. camt.054 tells my system that money moved in or out of my account. And that brings us to the end of our camt.054 journey. We learned what camt.054 is, why it's used, how its XML structure works, how CRDT and DBIT indicate account movement, and how it supports automated reconciliation. Next, we'll explore MT versus ISO 20022, understanding the migration. Remember, understand the message. Understand the payment. If you found this video useful, subscribe for more practical banking technology and ISO 20022 concepts. See you in the next video.